Dear students, in our previous sessions, we have studied about the reconstitution of a partnership firm during admission of a partner as well as retirement of a partner. In the fourth chapter, the second part is reconstitution of a partnership firm during death of a partner. So let us see about death of a partner in this session. So while telling about retirement, I told that death or retirement, in both cases, one partner will be leaving. After they leave the firm, the remaining partners will continue the business with new agreement. That means new partnership deed. So in the place of old partnership deed, new partnership deed will be framed. But the thing is, during admission, a new partner will come. While coming, he will bring cash as capital. Sometimes he may bring goodwill also. His share of goodwill also he will bring in the form of cash. Whereas in retirement as well as death, one partner will be leaving. Before he leaves, we have to close the accounts and we should calculate the amount payable to the partners there who are going out of the partnership firm. In the case of retirement, the partnership firm will be paying to the retiring partner directly, whereas during death, they cannot pay to that particular partner. We have to pay or settle to the legal representative of these partners, and we call these partners as deceased partners. Deceased partner. So settlement will be between the partnership firm as well as the legal representatives of deceased partner. So another party comes, they are legal representatives. Legal representatives of this deceased partner. So as a result of this, there are certain additional adjustments, additional calculations become necessary. So as the settlement of deceased partner will be done between the partnership firm and the legal representatives of deceased partner, there are certain additional adjustments and calculations become necessary. Like that, about calculation of their profit, calculation of their salary, all those will be based on the time when they die. For example, this is a partnership firm. Here, just imagine A, B and C are partners. They are running the business. In this point, just say in the month of June, here 1st April business starts. Here in the month of June, C dies. So after that, after he dies, the agreement changes, the composition of the firm changes. In the place of old composition, new firm will be or new agreement will be framed by settling all the amount due to C is deceased partner, everything. And we call the representative of deceased partners as executors. Who are executors? The legal representatives of deceased partner, we call executors. The amount due to deceased partner, will be paid to legal representatives of deceased partner, that is executors. Executors. The settlement between the firm and the executors. That is the change what we notice during death of a partner. Generally, if you see the differences between retirement and death, remember the differences between retirement and death, the same. That is, retirement generally takes place at the end of the year. The remaining partners, when the partner applies for retirement, the remaining partners may request him to continue till the end of the accounting period so that the calculations become easy. But here they cannot request. Death is uncertain. So during retirement, generally it takes place at the end of the accounting period or financial year, whereas death at any time. Settlement also like that only. Retirement, settlements between partnership firm with the retiring partner. Partnership firm and retiring partner, whereas during death, partnership firm with the executors. This is the main difference what we see between retirement and death of a partner. Calculations and treatments somewhat similar. Now, when the partner dies, especially all our calculations will be from year to year, because he was there in the firm till this period. Only this period he was there. All calculations regarding salary or commission, even profit also we will calculate for this period, and we will settle his accounts. We will settle his accounts by paying to his executors. Now, especially we consider profit, the main thing of the partnership firm. They are doing business for profit. We call this profit as accrued profit. Accrued profit means what? Profit calculated from the date of last balance sheet till its death. From year to year, what they calculate now, we call it accrued profit. That is based on the previous year's profit. We cannot do profit and loss account. And we cannot settle accounts. So we calculate this one on the basis of previous year's profit. Sometimes they may take average of 3-4 years. Sometimes they take 1 year's profit. On the basis of that, they calculate till he was there. For example, June means how many months he was there in the firm, that much. So like that only, interest on capital. It is another item. Interest on capital, that also will be calculated as per till he was there in the firm. Only that period we will calculate. Now, what are the different items we will take into consideration during calculation of amount due to deceased partner? It's very important. The items to be taken into consideration while calculating the amount due to deceased partner. There are many items. Let us see one by one what are the different items. Same items will appear in the deceased partner's capital account. So there are some items. First one, as I said, their capital. We should see their capital balance every time. Capital balance. Deceased partner's capital. So that should be taken into consideration. The first, they have introduced money to the business as capital. That portion is related to deceased partner. It may be in the current account also. That should be taken into consideration. First one. So first one is deceased partner's capital. Next comes, for this capital we pay interest. Interest on capital. If they agree to pay interest on capital, that also should be calculated. But here, while calculating interest on capital, till the date. Next, if they do any work for the company, or if they are appointed for any work, there may be salary, that also till that, or commission. Sometimes they would be giving commission, that also till the date. they give monthly salary. When they take monthly salary, you should calculate how many months he was there. Then comes, as usual, revaluation, profit or loss. Revaluation, profit or loss. Revaluation, profit or loss. Revaluation, profit or loss they should calculate, and it should be transferred to him if it is there. Then, as we have seen earlier, reserve fund or general reserve or only reserve, that also should be given. But here total amount will be there in the balance sheet. We take his portion and give. We need not calculate how many months he was there, because it belongs to him. His share will be shifted or transferred along with this goodwill. Goodwill also, like that only we calculate. We don't take the month, how many months he was there, or how many, the time period we don't calculate. We see his share and give. Another item like that only is joint life policy. Joint life policy. This also we calculate like that only, because sometimes they take joint life policy. So this also will be shared to retire or deceased partner. Along with this one, I told sometimes they keep accumulated profit in the name of profit and loss account. Profit and loss account, undistributed profit we call. Undistributed profit or undistributed loss will be there in the balance sheet. That also related to all partners. When a partner dies, that also should be calculated and should be given to them. Then comes the main item, that is profit. I told we cannot calculate profit, but we can calculate accrued profit. Accrued profit. The share in accrued profit should be calculated and should be given to them. Sometimes there may be loss also. Whatever it may be, loss means it will go to debit side of the deceased partner's capital account. These items will come in the credit side. Along with this, there may be chances of interest on drawings. First comes drawings. So if they had withdrawn money, drawings will be there, and drawings withdrawn, that should be settled. Sometimes they also give interest on drawings. Interest on drawings, if it is decided before adjusting these things, they should adjust with these things. Then we should see if this side is more, that means income is more than expenses. Expenses means we consider like this: when capital account comes, whatever increase is capital, that is income for him. So it will be there in the credit side. And this one is deduction in the capital, so it will be there in the debit side of the balance sheet. We see if there is profit, we have to settle. That much money we have to settle to the deceased partner. That much money should be settled to deceased partner, but we cannot give to deceased partner directly. We cannot give the amount or the settlement directly to deceased partner. I told we have to pay to the deceased partner's executors account. Deceased partner's executors account, or we can say the legal representatives of deceased partner. Legal representatives of deceased partner we have to settle. For that, we should prepare an account named the deceased partner's capital account. The deceased partner's capital account. All these items will appear there, and there we see we transfer the balance to deceased partner's executors account. Then we pay, or sometimes we may postpone payment. We may open loan account. Now let us see how to prepare deceased partner's capital account. Deceased partner's capital account is just like capital account of partners. Earlier we have prepared in the fundamentals, partnership account fundamentals, we have prepared partner's capital account. In the same way we should prepare. And in the retirement or admission, we have prepared all partners' capital account. All partners' capital account, because it was at the end of the year. Here we take all these informations and prepare only deceased partners capital account. Only deceased partners capital account. Let us see how to prepare deceased partners capital account. Deceased partners capital account. So this is amount column. This is also amount column. And right here top, as usual, deceased partners capital account. Deceased partners capital account. Here you write. So here comes particulars, amount in rupees, particulars and amount, So that's all. Now I told whatever increases his capital will come here. That means they're all income for him. While starting capital account, remember we should start with the balance. It's balance, previous balance. So generally it will be there in the credit side only. So write by balance brought down. By balance brought down. You will get it in the balance sheet, previous balance sheet. Then earlier we were seeing or entering about reserve fund. If there is revaluation profit, that also will come. Just we see by revaluation account. Revaluation account, that is profit revaluation. Profit, enter here. Then comes reserve fund. By reserve fund. That also will come this side. Reserve fund. But in this you should see only the share. They give together. Don't take together, only is proportionate should be taken. Like that only another item, that is goodwill. Goodwill will be given, that also you should take into consideration. Sometimes goodwill we have to calculate as per the methods what we have studied earlier. So it is only retiring partners share. Then comes all the incomes what by salary or commission. If any salary or commission is there, that also will be given to him by joint life policy. Joint life policy is just if it is there, that also will cancel it because afterwards form will be changed. Then comes accrued profit. Remember, you cannot write by profit and loss account here. We are not preparing profit and loss account. We are preparing temporary account, that is by profit and loss suspense account. Suspense account, that is a profit share. If there is loss, this side it will come to profit and loss suspense account. These are the general items what appear here. Along with this, if there is interest on capital, because if they are decided, that also you can enter by interest on capital, interest on capital. Like that only, if they had withdrawn money, sometimes drawings will be there, it will come this side because it decreases their capital to drawings account. Right here, if there is interest on drawings, that also you write this side only, that is also an expense for him. This is similar to the capital accounts what we have prepared earlier. Then you close the account. Here also close. Then you see, generally this side only will be more. Take the total and deduct is two expenses which you should be given to the firm. Then balance what you get now. This one, what to do? What to do about? What treatment we should do for the balance? That is his money, but he is not there. So who will receive that? That will be received by the representatives of the deceased partner or legal representatives, we can write deceased partners, write full deceased partners executors account, executors account. So this money balance transferred. So that's all. This account is closed. Now comes, what about this one? How to settle? For settling, after entering this one, we have to prepare another account, that is executors, deceased partners, executors account, deceased partners, executors account. So right here, same way, debit and credit, right? Deceased partners, executors account, executors account, executors account, right? The details same here, particulars, here amount, here particulars, and here amount. Yes. After preparing this one, from here we have to shift this balance to that account. For settlement, we want that account also. First we prepare deceased partners capital account by all taking which is related to deceased partner. Now it has been to transfer to partners executors account, deceased partners executors account. So here you entered deceased partners capital account entered to deceased partners executors account. Deceased partners executors account is credited by deceased partners capital account. Write this. Then we have to pay. So if you are paying, write here to cash or bank. So the representatives will receive the final settlement. Then there ends the relation of deceased partner. Afterwards, they continue the business or the remaining partners will continue. So this is cross transfer from here to there. By chance, if they don't pay, sometimes both deceased partners representatives as well as the remaining partners, they sit together and they discuss by their mutual consent, they may say that payment will be made in future. So in that case, here in this place you should write deceased partners executors loan account. Sometimes they may ask 50% cash payment or bank payment, 50% loan payment. That is also possible. 50% cash or bank, 50% loan. Sometimes full loan. Even sometimes we have to prepare deceased partners loan account and you have to pay in installments. That means equal installments you should pay. For example, it is 60,000 rupees. You have to pay 30,000 with the interest because you are paying him late. So with the interest you should pay. If you are preparing deceased partners executors account, executors loan account, you should draw here like that only and write deceased partners executors loan account is credited by deceased partners executors account. So like this you should prepare, right? So this is the difference between retirement and death. If you consider, the treatment will be same because retirement also one partner will be leaving, death also one partner will be leaving. But during retirement, generally it takes place at the end of the accounting year, whereas death is uncertain. As death is uncertain, the calculations or some additional calculations become necessary there. We have to do additional calculations and also certain new accounts will be emerging here, that is deceased partners executors account, deceased partners executors loan account, are paying in installments with the interest. So we do solve one or two problems related to this one. So in my next session, I will show how to prepare deceased partners capital account. Here deceased partners capital account is there. When you are preparing problems, you should write their name, who are deceased partner. So the partner who dies, we call them deceased partners. His legal representatives we call executors, and final settlement will be between partnership firm and executors. Sometimes they may pay immediately, or they may postpone the payment by opening loan account. That's all.